Hi, everyone. Welcome to our first VWY Excellence Call. The topic for this call is creating healthy numbers for your business, gaining the knowledge to trim the fat for your business's health, and today's date is July 24th, 2013. My name is Karen Kroll, and I am the head chica for Virtually With You. My team and I provide excellent virtual administrative and internet marketing support for small business owners looking to take their businesses to the next level of success. The presenter for our call today is Lisa Jackson, our resident bookkeeping black belt. A little background on Lisa is she has completed several QuickBooks training programs, as well as completing Accounting 1 and 2, Managerial, Budget Analysis, and Project Management courses. She is also continuing her education and is currently working on obtaining her California and Colorado tax prep license, as well as studying small business tax. Lisa's been my bookkeeper for 2 years this month, so happy anniversary, Lisa. I always tell people that Lisa is so much more than a bookkeeper. Along with my CPA, she's been my financial advisor and cheerleader too. She's wonderful, and I hope you'll see why when you hear her on the call today. So welcome, Lisa.
Thank you, Karen, and welcome. Sorry, I didn't mean to
I'm going to go ahead and turn the call and screen over to you now, Lisa, so you can take over.
Okay, great.
So we just have a momentary transition here while the screens switch over, and then Lisa will jump right in.
Okay,
good. I see it now.
Okay, great.
Yep, I see your screen.
All right, so I want to welcome everybody. This is exciting. This is our first call. So a little bit about this call. During the call, I'm going to touch on a few of the most commonly asked questions regarding the 3 financial reports. And by the end of the call, you should have a better basic understanding of each of these statements. So you can see on my screen here, it's a little 2 arrows, and it's kind of leading through a process. This is what I'm going to use to simplify the accounting process for you. I have a lot of clients ask me, well, how are you going to make these reports for me? What are you going to do? And it's really quite simple. What we do is you have all these transactions that you're running on your debit card or your credit card, writing checks, and so those are the transactions that as bookkeepers we need in order to build the financial statements. But before we can build the statements, we have to put them through the accounting process, which means we have to take all the debits and credits and analyze them and put them through the accounting process so we can get to the end result, which is the financial statement. There are 3 of them. The first one is the income statement. Second is the balance sheet. And the third one is the cash flow statement.
I'm sorry, I didn't realize you were ready for me to jump in. So let's start with that first report. And why don't you tell us what the income statement is?
Great. So the income statement, this is the report that summarizes the profit-generating activities or the cash transactions that a company has for a period of time. That period
Can we look at it, Lisa?
Oh, yeah, sure.
Can we look at it? Can you bring it up on screen?
Yes, here we go. Sorry about that. So this is our income statement. And so it's basically the profit-generating activities are summarized here. So that would be sales. Then we have the things that offset the sales, which are the expenses. And once we get through the expenses, then we have our net income. This report can be reviewed however often the client is comfortable. So it could be like weekly, possibly twice a month, bi-monthly, or quarterly. As you can see on the screen here, I have 2 scenarios. And it's showing, what an income statement could look like, either like a net income or a net loss. So you can also go through this statement and see what kind of impact your expenses are having. So you'd be able to analyze if you're overspending in different areas. So this is where we start when we go through the income, or when we go through the 3 statements. You want to start at your income statement and work your way down.
Great. So why don't you maybe explain to us what the net income means, and is the amount of cash that we're seeing there, does that mean that's readily available and liquid to the owner?
Right. This is a great question. I get this question a lot whenever I am reviewing the income statement with a client, and they're under the impression that if they have a net income, that is the money that is available to them that is cash, liquid in the bank. And that's not the case. This is just what has been generated for a period of time, and it's not the cash you have available. So let's take, for example, you may have a net income 3 or 4 months in a row, and that's going to accumulate over those 3 or 4 months, and that's how you get to the liquid cash in a company. You don't look at the net income and say, oh, I have $52,000 in the bank, and then log on to your bank and then see you have like $73,000. It's so confusing. So you want to make sure that you understand that income statement is just summarizing the profit-generating activity for a company. This statement, I forgot to mention, it's also referred to as the profit and loss, or the P&L. So sometimes the bookkeepers or CPAs will use different terminology, but it means the same exact thing.
Okay. And what about credit card transactions? Are they reflected in the income statement?
Yes, credit card transactions are reflected in this statement. We take every account that's running transactions, that would be like checking accounts, savings accounts, credit cards, all of those, and we categorize those in, through expenses or deposits that come into the bank as sales. So yes, credit cards are reflected on this statement.
Great. Okay. And then maybe you could tell us some of the important things that we need to look for when reviewing our income statements.
Sure. So whenever I sit down with a client and I'm doing a one-on-one meeting with them, I start at the top of the report, and I will lay out my reports. I'm going to show you a different report right now. I'm going to pull up a different P&L, and I'm going to show you how I lay them out side by side. And so I start at the top, and I start with my income, and you can see how I have January, February, March, so on through December. And I start to compare, sales for different months and see are they up or down, and give the client a bit of feedback. And then we can kind of analyze, what might have happened in a month where sales were down, and that gives them an idea of what's going on. So we're comparing trends at that point. So it's really important to just start at the top, work your way down, compare past periods, and get a feel for what's going on. Next, I'll go to cost of goods sold, if a client has that, and we look to see what they're spending money on as far as like getting inventory in, getting materials in. You can see truck fuel here. There's toll expenses, warehouse supplies. All these things need to be subtracted out of the income before we get to our expenses. So it's actually a part of the company's cost of doing business. And I also do the same thing with cost of goods sold that I do with income. I compare it to past periods, and I start to see if there's a fluctuation somewhere. You can see here in January, they had energy management upgrades, which this is a client who's doing retrofitting, possibly. And they have had an inventory expense at that point in January of $3,000, but in February maybe they got a lot more contracts in, and they needed to get more supplies in, so that it jumped up to $14,000. And then going on to March, came back down to 10, so maybe they completed some of those jobs and got a few more contracts in and needed a bit more supplies. But then you see in April, it went down drastically, like $6,000. So these are really important things to look at, the trends that are happening within these within the income statement. And then let's not forget our expenses. This is really important, especially if you are spending money on advertising. You want to make sure that the amount of money that's going out to advertising is equivalent or has a good relationship with the sales that are coming in. You don't want to be having sales that are maybe $20,000 and then spending, let's say, $10,000 to $15,000 on advertising. That doesn't make any sense. It doesn't leave a lot of room for other things that you're going to have to purchase during the month. So you really want to, compare your expenses and make sure that money that's flowing in has a healthy relationship with the money that's flowing out. So I hope that gives you a bit of an idea of some of the things to look for. There's really just start at your income, compare it to your past periods and see if you can spot the trends. Look at your cost of goods sold. Are you spending a lot of money on inventory? Maybe you should back off. Maybe you should, you feel comfortable upping it, and then look at your expenses and see what's happening there to see what's flowing outward.
And that's a really good point about the cost of goods sold. That's a term I've heard, but I actually don't really know what it really means because I don't use cost of goods sold in my business. So is that primarily for anybody who keeps inventory?
Yeah, for people who are assembling products or they might, like a contractor, for example, is going to have they're going to need lumber, they're going to need screws, they're going to need and nails and ladders and all these things to fulfill the needs of their clients, in their contracts. So we want to make sure that we're keeping those separate from the actual expenses and seeing what does it really cost you to do business. Yet we have our normal expenses, advertising and insurance and what's another one? Utilities. Those are the norms, but then when we get into cost of goods sold, we really want to kind of break that down and see what is it costing you to put, fuel in your trucks for your workers to drive where they need to go.
Right. So that's a line item that not all businesses may have. That's just something for people to know just in case. Okay, great. And going back to the other income statement where you were showing the different scenarios, you had mentioned that there was a 1 and a 2.
Right.
You want to explain that a little bit more to people?
Sure. Yeah, so scenario 1 here you see is where there's a net income. And I know a lot of bookkeepers, they don't want to be the messenger of, okay, you've had a loss this month, but there are times where we have to tell the client, okay, you overspent a little bit, and maybe sales were down, it wasn't quite a good period, and we need to take a look at what's going on. And so that's why I created scenario number 2. It's, not the best news to deliver, but it does happen, so I wanted to make sure that I was able to show you guys what that does look like if it, happens. So you see in scenario number 1, sales were at $200,000, but in scenario number 2, they were at $100,000. And we had, returns in scenario number 1 of $10,000, but they were up in scenario number 2 at $25,000. So across the board, things were kind of decreasing and increasing, so we start to see a little bit of a wobble there where it's like, oh, I'm not sure how we're going to do this month. And then cost of goods sold were up in scenario number 1, but they were down in number 2 because we didn't have the sales to support bringing in any more inventory in scenario number 2. And so that left us with a gross profit in scenario number 2 of $25,000. So when we got to the end of our expenses for the month, we had $40,000. So for the period, we were short $15,200. And that's not an ideal situation, but it does happen. So as bookkeepers, we do need to be aware. We do need to be able to report that to the client, and the client needs to understand how can this happen and how can it actually be remedied in the next period. So it's really good to look at your income statement and make sure if you do have a net loss that you're examining why and trying to figure out so you can, build your business.
Right. And just like you were saying earlier about the net income, it's that $52,500 is not the true cash amount. So similarly, I would think that the net loss, the $15,200, is not a literal loss that month. Like you're not that much in the red, literally
right.
cash-wise.
You're still going to have money in the bank. If you're in the red
right.
here, but you've had past periods that have been good and you've accumulated a profit over those periods, you're still going to have money left in the bank, but you're just, you've actually had to spend money from the past periods in order to get through scenario number 2. So that, you're going to see a reduction in the cash you do have in the bank, but you don't have zero. That's a good point.
Right. Yeah, because most people will know not to overdraft their account. And I also want to make note here that Lisa has exported information out of QuickBooks and into Excel and set it up in a way that is visually easier for people to digest. But just know that anybody working with QuickBooks, if they export out their own P&L income statement, it will look a little different. The information's all the same, but it will just be laid out differently.
Yeah, that's a good point. In the docs that I have put together, I like to use colors. So you see my cells are green because, money's green. Expenses are yellow.
That's right.
Because you want to, pay attention to your expenses, and then net income is orange. There's really no reason for that, or net loss is orange. But I do like to use colors because then it stands out, and it gives me a place to start with the client, so things stand off the page and they can digest it much better. And I've learned this over the years that I've been doing one-on-one sessions with clients. So yeah, it's true.
Right. Okay. Well, thank you for that. And so let's move on to the next report, which is the balance sheet. Maybe you could, explain to us more about this, but how it's used.
Yeah. So the balance sheet. This is actually where you're going to find the business assets, the liabilities, and owner's equity, or stockholders' equity is another name for owner's equity. This is also reported at the end of a period. So you're seeing here's our date, December 31st and up to 2000. Let me explain that for a minute. I know the income statement I said was for a period of time. I should have put a date up here, but I didn't. So that would be for, that date would be as of December 31st. And then here you see December 31st. So that's kind of confusing to clients, but they just need to know that this is the balance that all these accounts had at the end of the year. So yeah, this report is based upon the basic accounting equation, which is you'll see it up here. Is the assets have to equal the liabilities plus the owners or the stockholders' equity. If anything in this equation is out of balance, then the balance sheet is out of balance, and the bookkeeper needs to go pinpoint what did not, what account didn't balance out, and figure out what happened in order to make this balance.
Right, and I know from my own interaction with Lisa that and I'm just going to throw this out and let you explain it too. The liabilities are generally those debts that we owe or loans that we're paying back. Is that correct? So those don't show up in the P&L statement, but they show up here in the balance sheet.
That's true. A lot of meetings that I have with clients, they'll look at their income statement and say, well, my mortgage payment isn't on here or my car payment isn't on here. And I have to explain to them because that is an actual liability that you're carrying, and that is something that belongs on the balance sheet. So if you see here, this is where our liabilities start. I have current liabilities here, which is our accounts payable, salaries payable, interest payable, tax payable. Those are all things that are going to be paid back within the year or maybe within the next month or two. But ideally, we classify something as a current liability if it's going to be paid back within a year. We have long-term liabilities, which you see here. The mortgage is down here. That's something that's going to be paid back. It's going to take longer than a year. So then we put that in the long-term liabilities. That is the question I get quite often when a client wants to see, hey, where's my mortgage payment and how does it play into this? Well, we have to look at the balance sheet in order to see that. And what you're going to see here is the balance that is owed on that particular liability. It's not going to be categorized out as, accounts payable could be, you might have a bill that you have due to somebody who did some upgrades to a building that you own, and so that might be somebody's name. And you're not going to see that person's name on here. You're just going to see that the accounts payable account is holding a balance of $80,000 that's going to be paid out over the next, few months. Whereas the mortgage, you're not going to see the bank's name there, but you do know who you're paying your mortgage to. You're just going to see the mortgage liability account there with the amount that's owed at the end of the year.
Okay. And the owner's equity or the stockholder's equity, what does that stand for? What is that exactly?
Right. So down here on stockholder's equity, this is where we see this is the actual, it represents the owner's investment in the business, but we also have to take out any, we have to subtract any draws the owner might have taken, or withdrawals that the business might have had, and then we have to add back in the net income. So it gets a bit complicated when trying to understand the owner's equity. The simplified version or the simplified definition of that would be it's the owner's involvement in the company represented in a monetary amount, basically.
Okay. All right. So, and you can see from the left and the right side that they actually balance out, hence the name, balance sheet, where those figures have to match.
Balance. Yeah.
Yeah.
Exactly.
And would it ever happen where they're out of balance, and so that makes you go back and look at, why is it out of balance? Is that something that might happen?
Yes, it does happen. You don't want it to happen because trying to the point where something might have gone wrong could be very tedious. So that's why whenever as bookkeepers we're going through that accounting process, we need to be very aware and have a really good understanding as to how things operate as far as debits and credits, and make sure that we're analyzing those correctly and categorizing them out correctly. So then our report is going to report to our client correctly. So that is at the utmost important. And it's if you have a situation where it doesn't balance, then you just go back and pinpoint what happened and try and fix it as quickly as possible.
Okay. So when would we need a balance sheet as a business owner? How is that important to us, and when would we use that?
Right. So a balance sheet is usually requested by a bank. When you're applying for a loan or a business line of credit. You can use it when you're submitting your taxes, or when you're seeking investors. Investors are definitely going to ask for your balance sheet, and that's when you want to make sure that everything is on the up and up, that you're reporting everything, all the liabilities that the company is holding, all the stockholders' equities reporting correctly, any assets that you have, you want to make sure they're all listed there. So that's basically really when you would use it, is whenever you're seeking to have some kind of outside help as far as loans, investors, or even just filing your taxes, making sure that what you submit to the IRS is good. So,
okay, awesome. So I think we're ready to move on to the cash flow statement.
Okay, let's pull that up here. Oh, there we go. Is that okay?
Yeah, I can't see all of it,
Okay.
but I'm not sure if we need to right away, or you could just scroll around. That's pretty good. I can see that.
Okay.
Okay, so where does the information for the cash flow come from?
Okay, so remember at the beginning when I talked about the accounting process, that's when all the transactions that we analyze and we categorize out, this is the accumulation of them through all the other reports, from the income statement, from the balance sheet. It ends up on the cash flow statement and lets us know, okay, this is what's happening in our operating activities, in our investing activities, and our financing activities. This report can get pretty involved, so you want to make sure that you have a bookkeeper who understands what's going on, who debits and credits aren't a problem, and you have a lot of information here. So it just comes through that accounting process like every other statement does.
Okay. And what if I currently don't have any investments or shareholders to add to this? How would I use this statement?
Right. That's a great question. So I have a lot of clients who right now are just operating, running small revenues right now. They don't have a lot of operating activities. They don't have any investors. They don't have any financing going on right now. So what I've done is I've created the FitBiz cash flow statement, which takes into account money that they are going to have to be paying out, which is going to affect their cash. So things that are going to affect money flowing out would be like your car loan or your credit cards or your mortgage note. And we did see on the balance sheet, don't get those confused, on the balance sheet, that was the balance that was owed on the account at the end of the period. This is the cash flow, and this is telling you have X amount of cash at the beginning of the period available to you. And you had a net income of $52,000. Remember, that was from the income statement, scenario number 1. And then you have payments that need to go out of the company, which are the $5,560. And that $5,560 is comprised of your car loan, your credit cards, and your mortgage notes. So we want to take that into account when we are looking at, okay, we have a net income that's going to increase my cash, but I have payments that are going to flow out that are going to decrease it. And so that's going to
Can you stop for a moment and switch us back over to the income statement so people can make that connection? That'd be great.
Scenario number one,
so the
net income. Yeah, there it is right there. Sorry. You know, I get so into these that I just keep jabbering. So, yeah, thank you for stopping. So there is the net income right there. That's what I referred to right here. That's the net income right there. That was the $52,000 that's going to increase the cash that you have in the bank. So what is the balance of the cash that I have in the bank? Well, it's right here. It's the cash that I have at the beginning of the period. So I have $14,500 in the bank. I've taken my net income. I've subtracted out the money that I need to pay out in order to, satisfy all my liabilities or all my obligations, as some of my clients call them. And that brought me down to $46,000. So I'm going to add that $46,000 back to the $14,000, and I should have $61,000 in the bank. Now, this report will only work if you don't have all of these things happening in your business right now. If you don't have the operating or the investing and the financing going on. Now, if you have all these going on in your company right now, you are going to really want to, have a bookkeeper on staff that understands what's going on and can generate these reports for you. So I can't stress to business owners enough that it's so important to understand what's going on with their cash flow statement. So this is a very, very simplistic form of showing a client this is how your cash is affected by what you're generating over a period and how we're adding that back into the cash you have into the bank and taking into consideration the credit cards or the loan payments or the mortgage notes that you have that need to be paid out. So a client can look at this and say, I have $61,000 available to me. Great. So I'm thinking maybe I will, upgrade computers or something. Or if this is dipped down and there's a decrease, because as you can see, this is an increase right here. The $46,000 was an increase. But if cash decreased, then they might choose otherwise on upgrading those computers. So it's just a simplified version of the cash flow statement. So I don't really know what else. There's not a whole lot that's going on in this statement other than just showing you how the cash is flowing in and out.
And so these three reports, the income statement, the balance sheet, and the cash flow, those are all things that as business owners we need to be looking at on a consistent basis, whatever it is. For each person, each business owner, it could be different, whether it's weekly or monthly. I would think monthly is minimum.
Yeah, monthly is minimum.
See the health of their business.
Exactly. I actually have clients that I do a weekly meeting with, and we go through the basic income statement. We don't necessarily review the balance sheet, but we do look at what cash is available. So they can understand that they have X amount available to them. They maybe up their advertising, or like I said, upgrade their computers, and they need to know what's going on in the bank. And no business owner wants to be logging on to their bank account every single day to see what's going on. They want to rely on a bookkeeper that's going to bring the information to them and be their messenger and say, yes, with confidence you can upgrade your computers, and if you do, it's going to affect your cash this way.
Right, which is what I started off by in the introduction of you saying, that you were so much more than, a bookkeeper. Sometimes people think of a bookkeeper as just that data entry person, but someone like yourself with your skills, you really have a way of talking with the business owner that helps them understand all of this and make sense of it and see the trend, good or bad, and how to maybe go about even fixing and adjusting to get it to where they want it to be.
Right. Well, yeah, I've sat down with so many business owners and had so many meetings, and I wanted to really come up with, ways to report to them that they could understand and learn, and I wanted them to be able to make decisions with confidence and without having to go, okay, well, now let me go check your work and make sure that you're spot on. I want them to be able to build their business with confidence, and I want to be a part of that process. So I've really sat down and kind of figured out how do their brains perceive this information, and how can I report it to them in a way that's going to be conducive to their learning.
Absolutely, and one of the things that I think is so valuable in working with you is, and to be honest, I haven't worked with other bookkeepers outside of being in a corporate company, but you like to meet with the business owner once a week, pretty faithfully, to go over these things, and so that your people are staying on task and staying aware of the health of their business. And I really like that. I mean, that has saved me in numerous ways as well. It's not just me just sending a bunch of emails off to you saying, hey, take care of these things. So I know that's one of the valuable things that you bring to the table that I really appreciate.
Right. Well, thank you.
Okay, so are we ready to move on to that secret ingredient we've been talking about?
Let's do. So this is another thing that I had come up with, and I've kind of given you a sneak peek of it already when I was talking about how I lay out my P&Ls. I've created a scorecard for the FitBiz scorecard, which gives the client the ability to look at one page and one page only, and they don't actually have to go through the income statement or looking at the cash flow or anything like that. They can, and it's still readily available to them. But I've taken all what I think is the important information, and whenever I say what I think I've gathered that from meeting with my clients and know what questions they're going to ask, so I knew what to put on the scorecard. And they really want to know, okay, how's my profit? What am I generating this month? And what is the trend? And looking at this, you can see here I start with the gross profit. Now remember, I'm going to click over here and show you what gross profit is. It's the income minus, if you're a company that runs cost of goods sold. You take your income, subtract out any cost of goods sold that you may have, or any returns and allowances if you have anything like that, and you get to your gross profit, which is down here. So we go with our total income, we subtract out our cost of goods sold, and we get to our gross profit. So that's one thing they want to see. What was the gross profit? And then total expenses. That's also coming from this P&L here. So I'm going to scroll down and show you. Here's our expenses going across the board. That $50,000, you're going to see that number, right? Whoops, did not carry over, did it? Right? No, here. No, it didn't carry over. I'm sorry. But that $50,000 should be right here. And this is normally programmed, and I'm not sure, something might have had a little hiccup. But then you're going to get to your net income by subtracting your gross profit with your total expenses, gets you to your net income. And then another thing that was important to clients, they wanted to know what their net profit margin was. And so you can see here I have it formulated. So if we click on that, this whole entire spreadsheet should have all these formulas in here. So it's taking your net income and dividing it by your gross profit, which is going to get you what that percentage is. Moving down to the other category was, I had a client who asked me, well, what's the percentage of revenue I'm spending on, my payroll right now? So that was an important one. And I really haven't been asked about any other, expenses, but I know, you can do this with advertising. We can take any expense from the P&L, which is anything that falls down here, and we can put it here, and we can list it out, and we can come up with that percentage. Again, it's just taking, it's actually being calculated over here on this spreadsheet. So you see our gross profit. Well, let me slide over to January since we've been talking there. There's our gross profit. There's payroll expenses totaled up, and it's getting us, here's our, it's actually, it's getting this right here. So we are calculating it by doing total expenses divided by gross profit, which is getting us 36% of our payroll, or of our gross profit is being paid out on our payroll. You do the same thing with total expenses. See that it's going to be the $50,000 divided by the gross profit, and see that we're spending 80% of our revenue on total expenses. So this was important information to my clients, and whenever I put this together, they were so happy. So I'm actually calling this my secret ingredient to the Fit Biz, because I can take any report that you want and I can add it as a little tab here, and I can put it pulling back into this scorecard. So instead of going through all the reports, you can just look at this one scorecard and say, okay, I'm happy or I'm not happy. Like here in March, the client probably wasn't too happy because they had net loss, net profit margin was down, cash decreased. So there were a lot of questions being asked on this particular meeting with this client, I'm sure. But it just gives you the ability to take a glance at what's going on and start asking the important questions to the business owner and getting down to the nitty-gritty and seeing, well, why are our expenses high? Let's go take a look at expenses. Or why is the net income low? Why is the profit margin down? What are all these things? And really start digesting what's going on instead of just starting as an income statement, working your way through your balance sheet and then your cash flow. This really gets sent down to the nitty-gritty and into the makings of a company and making sure that everything that is in there is healthy and happy and thriving and just growing. So, yep, this is our secret ingredient right here.
Thank you. It is great to look at the big picture of everything, because when you are going back and forth between the reports, they make sense independently, but as a whole picture, it's still confusing at times, to look at all three reports and understand what does this mean. And so I love how the scorecard just brings it all together and makes the picture really crystal clear as to how the business is doing.
Exactly.
Yep.
And one thing I want to point out is reviewing this and looking at things are going to catch the little hiccup that you saw where it was this total expense didn't carry over correctly. So that's going to give you the ability to catch all these little hiccups with it if you're reviewing it on, like I said, I like to do a weekly basis because then my clients are caught up on everything that's happening almost real time in a way, and it's going to catch those hiccups instead of doing it every quarter, every 6 months where you might have a massive little hiccup in there, and it's going to be like, oh my goodness, why didn't we know this 6 months ago or 3 months ago? We could have made better decisions, It's going to help you catch those little hiccups, and that's why I love working this way, because it gives me confidence as a bookkeeper that I'm delivering the information correctly. So it's kind of good we had that little hiccup there, so you guys can see, oh, there we go. We need to go fix something. We need to look at that.
Right. Yeah, because numbers, they really do tell a story, and if something's off, it's going to show up at some point that it's going to tell you. That doesn't match, something's wrong.
Right, exactly.
Very good. Okay, well, is there anything else you want to share that I didn't think to ask you about?
I think we've actually covered everything. I know one question that I get asked a lot is, well, I currently have a bookkeeper, but I really liked your reports that you have and how you've put them together. How can I get my current bookkeeper to do these things? And virtually with you, we actually can customize a bookkeeping training package for your current bookkeeper that I can walk them through all these reports and how I put them together and why I put them together and why it's important to show it in this style or in this format or using certain colors. I can explain all that and teach who you currently are working with how to do this. You don't have to switch bookkeepers, start a new relationship, because maybe you really enjoy the person you're working with right now, but it is possible to have them train in a way that you're going to learn better and understand more so you can make better decisions. So I just wanted to touch on that and let people know that this is possible for you even if you are currently working with somebody. If you're interested in that, you can send an email to Karen, and I'm sure she can set us up in some way so we can, figure out what your needs are and get you set up, get you moving in the right direction.
Right, and that's not a package that is just kind of standard set up. We would definitely need to know more about, your company and your needs and what you're wanting to do, and then we would customize a package to fit that. So, yeah, definitely get in touch with me. You can email me, Karen@virtuallywithyou.com. And so Lisa and I actually have put together, Lisa more than me, but has put together a special online course that we wanted to tell everybody about. And basically it was taking what she went over in this call today and going in depth with it, so that you have the ability to understand your own reports and how they relate to your company. We're calling this online course FitBiz in 4 weeks. It's normally valued at $199. However, for everyone on this call, we're offering the course at an all-time low price of $99 for anyone who wants to, jump in and purchase the course. It's, like I said, it's 4 weeks. I forget the dates. Did we pick the dates, Lisa?
Yeah,
I didn't write
do
them
have
down.
them. Yeah, it's going to start on August 21st. And it's going to run through September 11th, so it's going to be once a week. So it would be August 21st, August 28th, September 4th, and it'll end on September 11th.
Great. Thank you. I forgot to write that down. And so anyhow, this offer that we want to give you, this all-time low price offer, is good for 48 hours. So we definitely wanted you to have enough time to think about it and then jump on it. And I will send out the information on how to purchase it tonight after I get the recording back, because I'm waiting for, I want to wait for the recording, put it into the email, and send it out with this offer. So is there anything else, Lisa, that you wanted to talk about with this course that I didn't mention?
Yeah, I just want to let them know that with this particular course, each week we're going to dive a little bit further into each of these reports. So there are 4 calls. So we're going to, basically the first call is going to be the income statement, and I'm going to give you all the ins and outs, what to look for. I'm going to show you different scenarios that could happen and answer any questions you may have regarding that report. And then we're going to do the same thing with the balance sheet and the cash flow. And then I can show you how to construct your own simplified cash flow statement. In September 11th, with looking at that secret ingredient again, I can answer any questions they have on those calls regarding that. So yeah, that's just, we're going to just really dive into these reports. So if from this one call you still have unanswered questions or you would like to just get down to the nitty-gritty, know what's going on, these 4 calls are going to do that for you. I'm going to make sure that you have an understanding forwards and backwards of what's going on in these reports and the value that understanding these reports can bring to you as a business owner.
Absolutely. And $99 is a really great price. After the 48 hours, it's worth mentioning that the price will go up to $159, so definitely want to save, extra money and jump in at this point. So thanks, Lisa. I got a lot out of it. I'm sure the callers watching it or who will watch it tomorrow and will get just as much out of it too. And I think it was really, you did a really good job of explaining all these things.
Great.
So what I wanted to do now, I'm sorry. Go ahead.
No, that's all. I was just saying great.
Okay. What I wanted to do now was just open up the call, unmute the lines, and see if anybody might have had any questions that they would like to ask you directly. So give me a second to... Okay.
You are now unmuted.
Okay, I think the line should be open. I hope everybody can hear me, or I can hear everybody on the phone. Does anybody have a question that they'd like to ask Lisa? No, don't be afraid to speak up.
I love questions. I love to help business owners. So if you have them, let's hear it.
Well, if nobody has any questions, it's fine. You can always email your questions directly to Lisa. She'd be happy to answer any of those questions too, and especially for the callers who couldn't be on the call live tonight, they can definitely email you in the next day or so. And so Lisa's address is lisa@virtuallywithyou.com. So, well, I think that's it since nobody... is jumping in there, I guess we'll go ahead and end the call. But thank you for your time, and thank to all the listeners and callers who were on the call that they took the time for this tonight. And again, we're here for you if you need anything, and if we can answer any questions that are just even of the bookkeeping nature that didn't have to do with this call, just let us know. Okay? Thank you, Lisa, and thanks to everybody who was listening.
Thank you. You guys have a great evening.
Yep. Take care.